Equity markets saw further gains during the September quarter, with global equities in Australian dollar terms ending up 2.7%. However, listed infrastructure securities lagged global equities during the quarter, with the FTSE Global Core Infrastructure 50/50 Index up 0.7% in Australian dollar terms. Our fund saw a return of minus 0.6% after fees, thus underperforming the infrastructure sector during the quarter. Taking a longer term view, over the last 12 months, the FTSE Infrastructure Index has returned 9.3% versus our unhedged fund returning 6.3% after fees in Australian dollar terms. For our currency hedged fund, the fund was flat after fees for the quarter, compared to a 1.9% return for the FTSE Australian Dollar Hedged Infrastructure Index. Compared to our benchmark, which represents what we think is the long-term rate of return for the types of infrastructure assets that we target, being OECD inflation plus 5.5%, the longer-term fund performance remains strong. That said, we are very aware that our performance over the last year has been weaker on a relative basis to the equity indices in what has been a strong market. The performance of most infrastructure sectors during the September quarter was broadly flat. Exceptions were weakness in the energy infrastructure sectors of pipelines and storage tanks, and these detracted from our performance as we were overweight. We continue to see nicely priced opportunities in this space, but sentiment rules over the short term. We saw continued strength in our European airports. Italian toll road company Atlantia was also a good performer for us, as was Channel Tunnel owner Eurotunnel. During the quarter, we continued to shift the portfolio towards stocks that we view as having greater upside potential. The largest change was initiating a position in the Canadian regulated utility Hydro One, which after an extended period of underperformance relative to the US utility peers and attractive fundamentals, moved it into the buy zone for us. At September 30, the fund held 28 high-quality infrastructure securities across 13 countries. The largest individual country exposure continues to be the United States of America at 32%, although this was reduced by approximately 3% over the quarter. Most of this reduction was in our holdings of US-listed regulated utilities, which have become progressively expensive over recent times. Part of this rotation was exiting US utility Ameren Corporation, which gave us a great return since we bought the position just over 2 years ago. There is nothing operationally wrong with Ameren, it just became expensive. Canada is now our second largest country exposure at 11%, closely followed by Australia at 10%, the United Kingdom at 9%. From a sector perspective, our largest holdings continue to be in regulated assets such as water, electricity poles and wires, and gas networks at 41%. 29% is invested in infrastructure operating under long-term contracts, such as pipelines and certain telecommunications assets. 23% is in transportation concessions, which is made up of toll roads, airports, and Eurotunnel. Our approach to listed infrastructure investing remains the same. Every day we look around the world for infrastructure assets that we think are undervalued by the market. We favour the infrastructure companies with strong management teams that have the right strategy to maximise the returns from their assets. Management teams that are disciplined enough to focus on low-risk growth opportunities and to avoid the high prices that come with acquisitions in the current market.